If you're trading without a stop loss, the truth is that you are not trading, you are simply gambling. Now, let me be very real with you. This is one mistake a lot of beginner forex traders make, and it gets their account wiped out, giving them a bad experience as they start trading forex. Now, in this video, I'm going to be sharing with you 7 reasons why you need to start using stop loss in order to manage your risk as a beginner forex trader. Point number 1: if you're not using stop loss, your risk becomes unlimited. No stop loss is equal to no exit plan. So that means if you don't have a stop loss at all on your trade, you don't have any exit plan. It means you've given your account, your trade, straight to the market. Whatever happens, it means you're ready to allow it to happen. Now, the market doesn't care about your feelings. It will keep going until your account is gone. Imagine you enter a trade and it starts with minus 20, minus 50, minus 100. Before you know it, it goes to minus 500. Then the next thing, your account gets blown up. Now, that's what happens when you don't use a stop loss and your risk becomes unlimited on every trade that you take. Number 2 is that your emotions take over. Now, when you don't use stop loss, your emotions take over. You become edgy. You're monitoring everything, every move of the market as it happens on your account. Now, you start saying things like, let me just hold it, it will come back. Many times beginner traders are the biggest believers because they just believe a negative trade will turn around overnight and become profitable. You say, let me just hold on, maybe it's going to reverse back. The honest truth is that is not strategy, that is hope. And in forex trading, we don't work on hope, we don't work on emotions. We are very practical and very actual. So I tell you, if you're working on emotion, your emotion takes over, your account can get blown in the process. The third reason is because one move can destroy everything. You might have been trading, making profit without a stop loss. It only takes one move, one big move, and all those profits, all those gains can be wiped out within a minute. How does this happen? When there's a major news, fundamental, for instance, maybe there's NFP, or in the recent times, the ongoing war between United States and Iran. Imagine when the attack happened and overnight the price of gold and crude oil spiked up. A lot of accounts were blown the next day because many of them never used a stop loss. So one major move can destroy everything. Your account can get hit, and that's just the end. And in such instances, a stop loss could actually have saved the situation. Point number 4: if you're not using stop loss, you are not managing risk. That's the truth. Professional traders don't focus on winning, they rather focus on how much they can afford to lose per trade. Let me repeat that. Professional traders don't focus on winning. Their goal is to identify how much they can afford to lose. What is their risk on a trade? That's their focus. And that's why you hear the word risk reward ratio. Thinking about risk before the reward, because the truth is this: if you don't have a stop loss, it means you don't have any control on your account. But when you have a stop loss in place in your mind, you've determined it by whatever means, then you already know that the worst case scenario, this is the amount I'm willing to lose in case things don't go exactly as planned. Number 5: one loss can wipe out all your profits. You may be right 10 times. You only need one bad move and every gain can get wiped out. And if that happens, game over. Your account is blown. You start all over again. Now, the 6th point here says that margin call is real. If you are not using stop loss, you are close, very, very close to a margin call. Now, let me tell you something. Most beginner traders, the truth is this: many beginner forex traders, they learn the hard way. They learn the very hard way. Now, the truth is that your broker is not your friend. That's the truth. Now, no stop loss means you are just waiting for a margin call to humble you, and it can really humble you indeed. And when that margin call comes, well, it doesn't warn you. You learn the hard way. So when you do using a stop loss, it means margin call is just around the corner. And the 7th reason is because you can't watch the market 24/7. You are not AI, you are not a robot. You can't keep monitoring, because many times when people don't use stop loss, then they start monitoring the account 24/7. They start monitoring, they're not sleeping. But the truth is that there's a limit to which you can do that as a human. You are human. You need to sleep, you need to rest, you need to step away. So you can't keep monitoring your account. But the market itself never sleeps. So when you get to your breaking point as a man, then The market is free to do its own thing, and at that period when you're not watching, things can go haywire and you can end up losing your account. So without a stop loss, one move you are offline, the next moment you're back, your account is gone. So this can destroy your account even before you wake up.